All right, guys. Morning, all. So, thank you kindly. So today I got a short presentation for you. Then I'll just throw it out to the floor, and you can talk about any questions you have. I'm going to give you kind of an abbreviated version of what I threw out at ITC this year, and then we'll go from there, and we can discuss whatever you want. I have a doctor's appointment across town I have to be at right at 9 a.m. for myself, so I have to jet out of here right on time today, unfortunately. But so we'll get started without further ado. How are you guys doing today? Good. Yeah. All right. So, basically, the crux of this presentation is just talking about, and I've mentioned this before, right? I think one of the unsung heroes of Forex is just common logic, right? It's just a little bout of common sense. All right. There's so much emphasis put on technicals and fundamentals and the actual mechanics of trading that I think that people lose sight of just common sense, right? And what I mean by that is that at the end of the day, the market is people, right? And if you think about, dare I bring it up, if you think about marriage, for those of you that have had the marital experience, if you think about marriage, sometimes one gets on very well with your spouse and you have a good day. And then other times it doesn't go quite as well. A lot, right? That doesn't necessarily mean that your marriage is broken. It just means you're having a bad, unrelatable day. Okay? And the same kind of thing can happen with Forex. All right, because the market is simply people. So some days you tune into it, and some days you're not. All right. However, there's a couple of common themes that one can look at in trading. All right, and a lot of it revolves simply around time of day. Yes, Ray. Thank you. Something like that. Yes. All right, so we're just going to talk a little bit today about general common sense, all right, and how it relates to time of day, support and resistance, and kind of tying those two things together. Okay? If you have any questions, fire away. All right, so what makes up a trader, or what is part and parcel of the whole package, right? Technical analysis. Some folks trade 90% fundamentally, others trade 90% technically, others trade 50% technically, 50% fundamentally. Whatever your blend might be, mine's probably 85 technical, 15 fundamental. Don't ignore the fundamentals, simply don't really institute them as other people would, I would think. All right? So, technicals, fundamentals, and then the mechanics of trading, right? Trade management, your execution, your money management, your trader psychology is the big one, right? And these can all sort of be broken up into thirds. But then the other component here is just trader smarts, common sense, and a little bit of logic. Okay? And I think what I need to sort of reiterate with this stuff is that the question that sort of pops into my head when people talk about time of day, hey Boyke, is, well, if the market's going to flip flop as if the market's going to flip-flop according to time of day, then what does it mean? What does it mean for the trend? Right? And I'll answer that question. And it simply means that it's simply an adjustment of expectation and alignment with what the prevailing trend is. Okay, and just on a fairly unrelatable point, I was reading somebody's Twitter the other day. I don't even remember who it was, to be honest. And they were giving the advice that a newer trader should stick to one pair and one time frame. Okay, and I could not agree more as far as trying to stick to a handful of, if you can't make money on the euro dollar, you're probably not going to make money on the pound yen. All right, but as far as one time frame, I really think that you are hurting yourself. When at Ranger School, there's something called Florida phase, and basically jump out of an airplane, parachute down into the swamps of Florida, and you get to wallow around in a marsh pit for 2 weeks. It's not that much. It's not as much fun as one would think. However, one of the big lessons there is when you're lost in the jungle, you make an attempt to climb to the top of the canopy. All right? Then you get a lay of the land from the top of the canopy and then climb back down into, shoot your little azimuth from the top, and then you climb down back into the jungle floor and then try and navigate the jungle floor, moving towards what you obtained as an objective by climbing the canopy. And the same thing can be said for market fractals. So the top of the canopy can be interpreted as a daily chart or a weekly chart, in other words, a direction. Thank you, Martin. And the bottom of the jungle floor can be interpreted as the smaller time frames. All right, so the smaller time frames are taking you towards that bigger objective. All right, so if you sit in there with one time frame, you might be at the top of the canopy and have nowhere to move there, or you're going to be at the bottom of the jungle floor not knowing really where you're going at all. Okay, so having some broader perspective on the market is paramount. All right, irrespective of intraday trading direction. Okay, and the same thing can be said for, one trading style. All right, when I was at ITC, one of the things that struck me was there were a lot of people saying, "Well, I only trade a daily chart, a daily direction." That's fine, but you wouldn't have put on a pound trade in 6 months. Right? So, I guess I'm saying is there has to be some level of adaptability there. Alright, anyway, we're going to move forward. A fairly unrelatable point, but I'm going to tie it together here in a sec. Okay? So, the market is just people, like I talked about. Alright, people share common behavioral patterns. Okay, one of them is we wake up roughly the same time. Alright, if you live here on the west coast of America, you just never sleep, period. Alright, we have the urge to eat at the same time. We have the urge to take breaks at the same time. Okay, we feel tired at the same time. And our desire to buy low and sell high is 100% congruently aligned. Alright, so my point here is, if people are taking breaks at the same time, and they're feeling tired at the same time, and they're waking up at the same time, all these periods during the day represent moments of cash flow, moments of fresh market impetus, don't they? People getting back from a break and putting money into the market is a moment of impetus in the market. It's a moment of money being added to the pie. All right? And if people want to buy low and sell high, that's irrespective of prevailing daily trend. Okay? So the intraday market moves with these normal human tendencies. Okay, time of day is the unsung hero of currency trading. Alright, so let me introduce you here. This guy's name is Fred. He's a trader. Can you... Alright. Intraday trading is 1 to 5 out. Yes. It's about right. I think an intraday trade probably is, yeah, about a 2 to 4 hour proposition. Okay, well, let me talk to you about old Freddy here. Alright, he lives in London. Okay, he wakes up at about 4:45 in the morning. Alright, he has a little breakfast by 5:15, and by 6:30, he's got himself to work. Alright, and by 7, he's finished his analysis, and he's ready to trade. So he's done about half an hour to 45 minutes worth of analysis, and that's right. And he's spoken to the overnight people at the desk, and by about 6:45, 7 o'clock, he's ready to trade. Now, what do you think the very first thing that he looked at in this time frame? What do you think the very first thing that he did when he walked into the office during this time frame? Morning, George. As far as analysis, what do you think he did? The raw basics. Think about the first thing that you do when you walk in the market. Even before any of that stuff. I know if I walk into like a 6 a.m. London situation, I'll look and see what Asia did. I'm like, what's the market done? You're like, oh, what did Asia do? Exactly, right? Or if you walk in now, you're going to go, like if you're just sitting down to the markets now, you're going, oh, what did London do? And what's your first inclination? To want to do the same thing. If I see Asia up, the first thing I do is I say, well, can it continue? Can that continue? Right? And then I start working out, well, where could it prospectively go? And then if it's going up, has it got room, and will it be at support? Is there some support? Has it got room? Okay, so the first thing that people tend to do, and if you do something completely, if you have no interest in the previous session, then I'm wrong. I just know for myself that it's just human nature to look back, 3-4 hours. All right, so a lot of times this initial sort of inclination is simply what have we been doing, and can we continue to do that? All right, and then this period here between sort of 6:45 London time and 8 a.m. London time, there's often a continuation trade of what Asia has been doing. And a lot of it is sort of just wringing out the last of the Asia pips. Okay, sometimes you'll get a broad continuation for London of the Asia move, but it's fairly few and far between. Okay? Yeah, I guess I'm talking more about, Mike, I'm talking more about the morning session. I guess when I think about London, I think about London as being 8 a.m. London time through to like lunchtime. When I think about Asia, I think sort of Sydney open through about noon, Tokyo. Okay? And then 8 a.m. the market opens, and about 10:30, this is all London time by the way, and 10:30 Fred says, I need some lunch. Why is he taking lunch so early? Well, because he ate like 5 hours ago. He's hungry. Poor old Freddy needs sustenance. Okay? So what do you think's happening? What do you think's happening at these times? 8 a.m. you're getting bank money, but you're also getting trader money and speculators and transactions going through. So at 6:45, 6:30, you're getting a fresh dose of money. And then right around 10:30, Freddie goes to lunch and he comes back right around 12. Well, the cool thing here is that this is right around New York Open. So what do you think these traders coming back from London are doing and the New York guys are doing? The New York guys are doing this. What did London do? They're going, well, hey guys, let's have a look, see what London did. Let's see if we can continue that. Right? And then they make trade plans in accordance with that by default. Okay? And then by sort of 2:30 New York time, 2:30 as the New York Open, and then 4 o'clock, it's time to go home, and he's aged quite a lot in that time. It doesn't look quite as sprightly. Okay? So here's an interesting little little thing here. All right, and basically what this is this is Asia. This is London money. Okay, this is London lunch. Notice how the volatility drops. And this is a return back from lunch into the New York Open. So this is great, David. You're not telling us anything we don't know. How do we look at this to make money? Well, the question is simple. All right? And Ganno, you joke, but sometimes it's that simple, and that's what put us in the Euro short today. We were bearish to begin with. It goes up, makes a triple top, then a little lower high, precisely at the 8 a.m. candle. Oh, let's take a shot on the sell side. Thanks. Then we sat around, talking about baseball and the Olympics for 2.5 hours while it dropped 50 pips. Okay. So obviously it's not quite that easy it's not quite that easy normally, but sometimes it is. That's when it's nice to be a Forexman. Alright, so buy low, sell high, trend notwithstanding. Okay, so the basic rule here is the following. Market open, at resistance, you short. Market open at support, you buy. If you're kind of in the middle of no man's land, you don't do anything. Okay? So what did I mean by support or resistance? If you're at, let's take for instance the pound yen. Pound yen was bearish as could be for London. Why do you think this is a little trade pen here, get long through about 122.50. Why do you think that this went up at the New York Open? Well, you've got a little trend line here. If you take a fib of the whole rise, you're sitting right at a 382 fib, and this is also previous support. So you've got support at New York Open, they bought it, despite this being down all day. Novel concept. Alright, and obviously I'm doing this in hindsight for you, foresight at bootcamp, but this is an example of what I'm talking about. Okay, trend notwithstanding, support at the open, long, resistance at the open, sell. Okay, let's go back here. Alright, so this is what I've noticed in the market over the last 2 to 3 years. It doesn't seem like it's going anywhere. Alright, there's a certain market pattern to the way that sessions have been moving. And tell me if you have seen the same kind of thing. Alright, if late New York, or if New York takes the market up, alright, and then in the late going, they fade price back. And when I say fade it back, this might be a central pivot point for the day, or daily central. This might be a fib of the previous rise. It might be a key psych level, a visual support or resistance level at Asia Open. All right, this is 8 a.m. Tokyo here. What do you think the Asia traders are doing? They're looking at New York, saying, "Well, I want a piece of that," and then they're saying, "Well, am I in a situation where I can buy it? Is it feasible to buy it? Oh, look, it's at support." What does Asia do? They take it up. Okay? And I know this is very simplistic, and it's not as, I've definitely dumbed this down quite a lot, but the logic remains the same. Okay? So they take it up. Then what happens around 6:45, 7 o'clock? This is Fred getting to work, right? Freddie's in work kind of in here. And he's like, well, I don't really want to buy it up here, but I noticed New York took it up and Asia's trying to take it up. Then what happens? Sort of 6:45, 6:30, it sits at a little swing pivot this rise and they take it up some more into the London Open. And then what happens? London kicks in and goes, well, hold on a minute. This euro has already moved from the Asia low to the high, 110 pips. Don't look at the statistics. I don't really care. What do you think the rough average daily range of the euro is? About 120 pips. Yeah, it's tight right now. But, you know, so if the euro's gone up 100 pips, say, from the Asia Open, or 90 pips, chances are London doesn't necessarily want to buy it there. Would you agree? Yeah, you'll get that anomaly day where it'll just break everything. But let's say it's sitting up here at sort of a major fib zone of the drop, and maybe reversal pivots for the day, and maybe a key psych level there. What do you think London wants to do? They want to short the thing. Okay? Does this make sense? So Asia looks at New York and goes, well, can I continue that? Yes, okay, let's go. Then pre-London guys look at Asia and go, okay, well, let's finish the job. And then London kicks in and goes, well, I'm not really feeling this whole upside. I'm not really feeling buying into the resistance when we've exhausted the average daily range for the most part. Okay, let me sell it. And I'm not saying ADR is instinctively, you know, oh, well, look, we've reached the average daily range, I'm now going to short. That might work as a strategy. Who am I to say no? But I would doubt it. My thing with those, Boyke, is that my thing with news is that basically the news is going to bring volatility to the market, typically will not bring direction to the market. So I go about my trading business and then try to protect myself around news and take it as it comes. Yes. So honestly, I don't really, to say I don't pay, of course I pay attention to them, and if they work for me, great. If they work against me, I live with it. Yes, gangster. This is what I'm saying, guys, is that your whole analysis, or at least mine, revolves around where are we in relation to money coming into the market or exiting the market. Why, you got a black screen there, GY? Yeah, I hate to be I hate to be a stickler, but if I have to reboot the camera, I have to redo my little pen and things too, and that's going to take a few minutes. If you don't mind just refreshing your side. Okay, so what about the reciprocal? Okay, what about the reciprocal here? You should be seeing a PowerPoint, GY. Make sure you don't have the it minimized in your taskbar there. Okay, what about the reciprocal? New York down, back at resistance. Asia says, great. New York was down, I'm going to short you. Little continuation. Open London at support, takes the market up. Not rocket science, yeah? Okay. Now what about this one? This one's a little bit different. What about the one where New York takes you down, but you don't really get a fade back? You don't get any kind of pullback. What do you think happens then? Asia goes, well, that's great, New York. Thanks for taking us down. But I can't continue to sell it here. So they give it a nudge. Like, you know, Tokyo opens and they try to short it. This is the weird thing about Asia, is that they'll actually short the continuation of a precipitous drop a little bit, for about an hour, and then they'll buy it. And then the whole thing repeats. Pre-London, they long it up. And then what happens? You open London at a major red zone of the drop, and London goes, awesome, we're just going to do what New York did. We're now in position. So you basically get a pullback for Asia and a continuation for London. These are the best trading days. These are the good ones. Okay? And the same thing on the upside. Now what about those days where you're just not ready you're not really in a buy or sell zone at all? Getting good continuations, yeah. When you just sort of sitting in the middle of support or resistance, well then you wait and you work out, oh, okay, well, where is my support? Where is my resistance? So this will typically happen if you're a pivot watcher. This will happen if you're sitting at like R1 for the day. You're not really at a situation unless you got confidence there where you want to sell it, but you're also not where you want to buy it. So therefore you'd wait for extreme pivots to be hit on the upside, or your central to be hit on the downside, and you'd look to buy it or look to sell it respectively. Okay, does this make any kind of remote sense? Alright, and my support or resistance is simply pivot points, key moving averages, key fib levels, visual support or resistance, etc. Okay? And that's it, guys. Nothing more complicated than that is really what I'm throwing at you today, other than time of day and support or resistance. So let's have a look at something here real quick. Let's wait for the chart to update. The yellow block here is London. Alright? And take a look at where London opens being, this is a euro dollar chart, I haven't gone digging for it. Take a look here where London opens, how often that first candle is the high or the low for the day. In this case, the low. Okay, this one went up within the first hour and then jogged down. Notice how New York, which is the blue here, opens, and that's the low for the day. My point here being is look at how often, look, this first candle is the high or the low for the day. Okay, this is stock market open. This is stock market open London, stock market open New York. It's not coincidence. This is stock market open London, stock market open New York. Okay. Look, the open of New York. This one here, you came to double bottom within that first sort of hour you were at resistance and they shorted it. You know, does it work all the time? No. But here you are. That's the first candle of London. This is the first candle of London. You're starting to pick up what I'm putting down. Now, why would they short that there? Well, you have resistance. Why would they long this? Well, you have a higher low support. You think there might be something to this time of day thing, by chance. So this here is the very first candle of London, and this here is the very first candle of New York. You with me? First candle of London, half of the day. And so it goes on and on and on and on and on and on. You're going to see it all over the place. Time of day with support or resistance is absolutely critical. Here, first candle of London. That doesn't always mean that that candle is the absolute direction for the day. So I'm not advocating looking at the first candle of London and going, oh, it's green, that's going to be the long for the day. Not necessarily, okay? It simply means that a lot of the time, that can be the high or the low for the day. So, in other words, if you're a London trader, if you're trading the London session, make sure you've got your ducks in a row before 8 a.m. Don't roll in there at 8:23 and think, oh, well, it's my time to shine. You're a day late and $1 short. Okay? And you'll see a lot of times these midpoints of London are also turning points in the market. Why would that be? Well, Fred's getting back from lunch. And he's like, well, I'd like to do what I did previously, but is it possible? You know, and this is exactly what I'm talking about. So here, you've got the very London open candle. Okay, the first candle is coming off support, little trend on there, and it goes up. That doesn't necessarily mean, it doesn't always necessarily mean that it's that direction for the day. Okay, but almost always, 70% of the time, you're going to get a trade as it opens. You know, like there's nothing wrong with the, I guess I do. And a lot of that is just my lifestyle. I tend to be out and enjoying the sunshine and living a little bit for that time frame. So I do discount that, yes. So check it. London open, first candle, the high. The high. The high. Yes. It's interesting though, isn't it? Look. It's within 10, 15 minutes of the open. So, if you've never sort of sat down and just given thought and contemplated support and resistance as it pertains to cash flow in the market, I would invite you to do so. I think you'll be pleasantly surprised. Right? To me, it's one of the most powerful tools in Forex, and you don't have to do anything. You don't have to do anything. You just have to be there. And then go, well, is it high or is it low? And then watch for your little confirmation and put on a trade. I actually don't bill, but if you email me, I'll send it to you. David@fxbootcamp.com. I'm talking about Tokyo, Boiki. Now, Tokyo is a little less reliable as far as low and high for the day. Alright, because like you're saying, there's the Sydney Open, there's Tokyo, there's Shanghai, and then there's Middle East, and it all kind of blurs together. Alright? Where London is explicitly 8 a.m. London. And then there's, then you'll get that hour move for the Open. And then sort of 9 a.m. London time, a lot of times you'll get a continuation. And then 10 to 10:45, you'll get a pullback of that. Look at your charts today, you'll see what I'm talking about on the pound specifically. And then right around noon, which is getting towards New York Open, alright, or New York money coming in, so right around 12 o'clock, 11:30, 12 o'clock London time, you're getting New York traders coming in, but you also got London guys coming back from lunch. That's a great continuation of what you had been doing. Well, I would look at that as the continuation of, I call this a sessions indicator, Colin. It's just time of day on the chart. It's nothing more than time of day highlighted. Yeah. So, by itself, time of day is useless. By itself, I wouldn't say it's very important. But when you tie it in to your other support and resistance, and you start to say to yourself, well, are we low or are we high? And if you're feeling uncomfortable buying at a level, I promise you that there's 23 other people in the world feeling the same way. So if you're saying, I don't really want to buy the euro here, it's pretty high. There's a lot of people sitting around the world saying the exact same thing. And then when it starts to roll over short, everybody jumps on the bandwagon because that is the preferred direction, irrespective of trend. Now, how does trend play into it? Well, if you're at resistance at the market open in the context of a daily downtrend, that is going to be your big down day. That's a sell and hold day. Now, if you had support within the context, if you had support at London Open within the context of a daily downtrend, it's a short up scalp day. Make sense? In other words, your level of expectation is I'm trying to make 50 pips and go to bed. So you've got to take daily trend into context when it comes to managing your trade and expectations for the day. But the market will still go against daily trend around buy low and sell high. It's just the magnitude of the move differs profoundly. Does that make sense? So it's like saying this. Here's your downtrend. And you're saying, right, I'm at London Open here. Okay, well, big down move. It's and maybe the next day you're like, well, I'm at London Open. You've got weekly reversal pivots. I'm at London Open here. Okay, well, they're probably going to do this. And then New York kicks in and goes, thanks, guys. It's been real. And then in this case, you're trying to make 40, 50 pips and call it good. I just use things like visual areas, feds, and pivots, basically. Yeah, pound. Now, the Aussie is less reliable as far as just, the Aussie is just a little bit less reliable as far as time of day, but the pound, the euro, the yens are really on it. Euro yen especially is just incredible. What I use to confirm it, it's really for another whole other webinar, I'm afraid, Ganna, to be honest. I'll use price action principally for determining direction, and then if I'm at what I like to call a move fib, which is say a pullback of the entire move, I'll wait for a 15-minute sort of failed high or a 5-minute lower high, so to speak, to take a short. And if I'm going counter trend, then I or if it's a little swing fib, so if it's something like this, a little quick pullback like this, then that is, I'll just take it where I like it. Or if I am looking for a fib of the entire drop, say, so something like this, I'll then wait for a little sort of 15-minute lower high to try and short that. It gives me a tighter stop. But like I said, I can spend 2 hours on that, literally. It is, Mike. A lot of time that euro yen is just euro exposure at the end of the day. Maybe next webinar we'll talk exclusively about confirmation. Confirmation is an enigma, isn't it, in Forex? I mean, nothing truly confirms a trade. If it did, we'd all be millionaires. Right? Confirmation is a tentative thing. Anyway, guys, I hope that you enjoyed today's trading session. If we concentrated, we might have caught some of these trades. And I'm sorry I have to cut out of here right on time. But thanks very much, guys. And we'll talk to you later.